Very sing-songy.
It's the whole thing that throws me off.
All right. Good morning, everybody. This is Garrick with eXp Realty. And this is our Friday morning meeting. And we have special guests, Aaron Moore and Andrei from JVM Lending. I hear they've got free money for us. Let's see what we can learn and how we can partner up. What's going on?
Wow, what an intro. So when's the last time free absolutely meant free? That's my first question to you.
It piques the interest. It gets people coming, you know. So I mean, I've always said, hey, I've got the house and Aaron's got the money, so let's go. You know, we're ready to go sell this place. So
there we
focus on
go.
him.
Yeah, well, I will certainly let Andrei speak more to the free money aspect of like down payment assistance programs. I think he can cover that in just a couple minutes and give you guys the highlights. But they actually are a real possibility now when they absolutely were not in the last couple of years. So go ahead, Andrei.
Yeah, absolutely. So, one of the nice things about a shifting market is that buyers gain a little bit more power and they can actually get their offers looked at if they're not, 50% down or all cash or fully non-contingent. I actually had an offer accepted the other day that was contingent on the sale of his current property, which is like unheard of if you rewind the clock 6 months ago, right? So we're seeing some of these options jump back. And in terms of the free money, there's a lot of misconceived notions or a lot of misconceptions about down payment assistance or first-time homebuyer programs that are not the case. So first things first, not all down payment assistance programs require buyers to be first-time home buyers. So even if you're buying your second, your third home, whatever, you can still use some of these programs for assistance. And not all of them require you to be low income either. So likewise, even if you make up to $280,000 in household income, you can still use these programs, which is a pretty generous limit, right? So those are kind of the two myths we'd like to dispel about down payment assistance. Now, the closer to those two restrictions you get, the more low income, and if you are a first timer, generally the options are a little bit more advantageous, but it's not a requirement for everything. So actually, I'm going to share my screen real quick and just walk you through three options I really like, and probably our most popular ones right now. And by the way, I'm showing you right now the flyer that we design and we'll co-brand with you. So if you choose, we'll have our info here, your info here. It's a great little talking point that you can bring up at open houses, and just educate people, because I've seen, a popular one if people are doing like some jumbo options that they have on the table because, great interest rates, 7-1 ARMs, but a lot of those options take 25 or 30% down. And you're like, yeah, okay, you could get a 4.5%, 7-1 ARM if you have 500,000 in the bank. What if you don't? So these are kind of a good foil to that scenario. So can everyone see my screen all right?
Yeah, I see you guys good. Hey, by the way, you're not limited to talking about free money. So I want you, we want you to talk about all the things that are special about JVM, because I know you guys are doing a lot of volume and have a lot of good service. And the things that stand out for me are like the was it 14 or 17 day close?
14 days, yeah.
Super, top in terms of service, in terms of like clients calling in and being able to be reaching somebody to answer their question pretty quickly. So I want you guys to talk about that too.
Mm-hmm.
So let's go ahead. Let's continue with this and we'll talk about the other stuff later.
Totally. We'll give you the abbreviated version. Really, the biggest highlight right now, guys, is that there's a program out there that'll give first-time homebuyers up to 10% down based on the purchase price. So they're buying a $600,000 home, that's $60,000 they can get in assistance, and that's forgiven completely after 5 years. That's called the Cal Halfa Equity Builder. It's forgiven 20% every single year, so 100% of it's forgiven after 5 years. Now, the catches are: 1, you have to be a first-timer. 2, you got to make less than 80% of the median income. So in the Bay Area counties, that's anywhere between $120,000 to $136,000 in household income. So purchasing power of that like $600 to $650 price range is really where people are going to top out. But it is awesome for first timers, and especially in the condo market, this is a game changer. You can buy with 10% down, get better MI, benefit from all of those things, and then basically have that equity gifted to you. And the rates are killer. They're 5% right now, which is actually a steal if you've looked at condo rates. conventional, Fannie Mae, Freddie Mac rates in the moment. So that's kind of the abbreviated down payment assistance pitch. I think there's a lot of buyers that fit this, but they just have no idea that this money's sitting out there waiting for them to take it. There's a few others, Chenoa and GSFA, with less restrictions, but also a little less helpful. They don't quite give you that full 10%. They usually cap out around 5%, and they have different repayment terms. But that's kind of the 30-second elevator pitch of CalHFA. If somebody's low income first timer, they absolutely need to look at that 10% equity loan. All right. The other thing I was going to talk about is kind of what Garrick had touched on with some of our value props. So let me share my screen here for that. Okay, I'm just going to do sharing with full screen because I can't get that specific one up. All right, here, I'm just going to move to. So just to touch on our services real quick. So we are a large team model that does quite a bit of volume, as Garrick mentioned. So that enables us to have 7-day-a-week coverage. We have a full team of people, about 40 employees right now. And so we rotate through coverage on the weekends. So Saturday, Sunday, and holidays, except for Christmas and New Year's Day, Christmas and Thanksgiving, we're gonna have somebody available to answer your questions, help put together offers. We're also extending after hours coverage. So up until 9 p.m., we'll have managers on call to help put together offers, run scenarios, whatever you need. We guarantee 60-minute response times to anything that goes into our team. We offer consistently low rates that you can actually see on our website. We advertise our rates transparently there. Fast closings, Garrick touched on that 14-day close of escrows and a whole bunch of other stuff. I'm also going to just call out real quick, one of our superpowers is our appraisal panel. We use local appraisers. We have control over who sits on that panel. So, we can't necessarily handpick a specific person for a home, but we can handpick the pool of appraisers we use. So we only have local people. We only have people that use high quality or that return high quality reports. And if somebody makes a mistake or if somebody gives us a bad quality report, we kick them off our panel. So those are some of the ways that we support your clients. I'll maybe take a quick pause there to see if there's any questions. But I want to talk about some of the ways we support you guys as well. So we work a lot to support our agent partners building their brand and especially their digital online presence. So we'll help you go through and audit your presence on your website. Who's got every single bio cleaned up, every single link and redirect and phone number across the multitude of real estate platforms out there. It's going to take you hours of your time. We'll do that on your behalf. So we audit it, we update it, we make sure that your bios and everything you're promoting is search engine optimized, so Google can find you really well. And we have a team that specializes in this, and again, we'll do the heavy lifting for you. So we can talk more about what that entails, what that looks like, but you can follow up with Aaron or I afterwards so we can kind of touch on those. And then the last thing I wanted to talk about was this pre-approved and ready to move list. This is actually something we recently came out with on our website. We'll drop the link in the chat after this, but essentially what this is the list of every single buyer's agent that we have sorted by city and price point. You can actually filter it down and say, okay, I want to look at someone who's buying in, I'm just going to scroll so I don't mess with it. I want to look at someone who's buying in Oakland, right? I got some buyers out there, or I got a listing coming up in Oakland at, right around the 999 price point. I got some options. I could reach out to Tina. I could reach out to Omar. I could reach out to Colette. And say, hey, look, I got this listing coming up. It's kind of in the price range where you have buyers. Why don't we put together a deal off market so it's not sitting for 30 days? You look like a rock star to your sellers because you're coming to them with fully pre-approved and pre-underwritten buyers that are ready to go. These are only people approved in the last 3 months. And so you're not getting someone who got pre-approved in 2020 that is like, why the heck are you emailing me, right? Or their agent's like, why are you emailing us about this person? So this is a full list. We have about 160 people. I think it's going to get updated today and should have about 170 afterwards because we're adding new pre-approvals to this as we do them week by week. And so you can scroll through city by city. It's also a great exposure for your buyers, right? Wouldn't it be so nice if as a buyer's agent, you were now getting your phone ringing off the hook with listings coming out and listing opportunities? So anyway, very powerful tool. It's free. We just put it together and again, update it every single week. We're trying to be those market makers, right? Brokers are supposed to be bringing together two parties. So we're trying to be that middle ground, right? And bring together our buyers and our sellers to make things happen. All right, That's it. Hopefully I didn't take up too much time there, Garrick, but I'll open it up for any questions. If you want to dive in any of these tools further, more than happy to.
Do you have a special loan product that you guys excel in?
I would say probably our number one is jumbo, because we are delegated direct underwriters for all of our jumbo products, meaning that we can underwrite on behalf of like 12 different banks that we sell to after closing. So you're not going to get slowed down. You don't have to go through a third party. You're not waiting on outside underwriters. It all happens in-house, and then we ship off the loan post-funding. So that's probably our most aggressive, because yeah, there's some banks out there like private client relationships. They might get your ultra wealthy clients a really good deal. However, if somebody doesn't fall within those parameters, maybe has like 20% down but is tied in reserves, or 15% down, or whatever, we've got a variety of different options we can fit them into that would still work and give them a competitive deal. And we work with a lot of those big banks too, the Chase, Wells, Citi, Morgan Stanley, a few private investors and a few credit unions as well. So if you have someone that's looking in that jumbo price range, which is essentially the entire Bay Area right now, for any single family homes, we're going to have an option that maybe one of those big banks would reject or turn away and saying, you know what, they're not quite fitting our credit profile. They don't have enough to open up a reserve account or a checking account or whatever with us. We don't have those requirements. We're non-depository, so we can get a lot more flexible and make deals happen that others can't.
So if I couldn't get it, so let's say Bank ABC was, I tried to apply at ABC Bank and they said no. But if I came through you, are you saying that I may actually have a more competitive rate to end up still at the ABC Bank?
Well, I mean, I can't speak to the rate of ABC Bank, but I think you still have a very competitive rate overall, yes. And more importantly, you get approval. So
well, what I meant by that was, I mean, would I be still facing the same overlays or facing other issues if I was direct to the lender as opposed to being brokered to the lender?
So that's a great question. You're not getting brokered to anybody, because we're not sending out so brokering means that we take a loan application package and we send it to another bank for underwriting and approval. We don't do that. We underwrite it and close it in-house. So the only underwriters you're dealing with are JVM underwriters. The only appraisers you're dealing with are JVM appraisers. And then post-closing, that's when we make the sale. So like, for example, a Wells Fargo has approved us to underwrite loans on Wells Fargo's behalf. So it's exactly the same guidelines. The difference being that we don't just underwrite to Wells Fargo guidelines. If, one of the things that trips people up at Wells Fargo is prior occupancy history. If they fall out of that guideline, we can take them to Chase, we can take them to Morgan Stanley, Union Bank, US Bank. We've got all these other banks that we've been approved with. So they get that same seamless white glove experience, but we do the shopping for you. You're not trying to like have them reapply in 14 different places to find the one that might be a fit.
Yeah. Okay. What just for clarity, what is jumbo price? What is that over?
So jumbo loan. It can apply. Yeah, so jumbo loans start at anything that's 647,000 or higher.
Wow.
Because technically over that limit. Yeah, exactly. So you could, between 647 and 970,000, you have the option of either jumbo or conventional or even FHA. So we're uniquely in what's called the high balance range. So if you only have 5% down and you want to buy at 800K, you can still do that with FHA or a traditional conventional loan, as long as you're in the Bay Area counties. And then above 970,000, you will have to go jumbo. And that's loan amount, right? So even $1 million purchase price with 10% down, you can technically still do that FHA or conventional. And I'm actually going to just tout FHA real quick for a minute as well. That's probably a loan product that is very misunderstood and hated on for reasons that we disagree with. But we can close those in 14 days. Actually, Aaron's personal purchase.
Let me chime in.
14 days FHA. Go for it.
Yeah. Hey guys. So FHA. I think FHA in general can be a fantastic option. I'm obviously a little biased, but I think we absolutely crushed with them. So I was able to win my purchase as a 14 calendar day FHA while keeping the appraisal contingency intact, which again, at the time, we were talking just about a year ago, was pretty unheard of. We were able to beat an all cash offer as well. So this really, now it really does come down to how, who you work with matters, right? So my agent working with the listing agent, it was helpful that I knew both of them. Listing agent knew me as well, and she was able to tell her sellers, hey, I know this guy, he'd be great here. But what it really came down to was that my buyer's agent had worked with us, dozens of times. He was able to very confidently explain, yes, you have an all cash offer. He's got no contingencies. Aaron's a first time buyer, even though it's JVM and the best in the biz, still a first time buyer. His wife is horrified of the horror stories. She's heard of people losing EMD. So they want to keep the appraisal contingency, but it'll be short. It'll be 10 days. They'll rush the appraisal, which, as Andrei said, we order every appraisal as a rush every time. And it's always from a local appraiser. So you're not going to have someone, driving out from Stockton that's never heard of Albany before or something like that, right? It's gonna be someone that works Albany, El Cerrito, Berkeley. So the appraiser was able to get the job done in 8 days, right? So 2 days ahead of contingency timeline. Came in at value. But before that, even the agents have conversation, right? The listing agent tells her seller, hey, that one's all cash, clear as day what that is, no contingency, easy peasy, 9-10 day close. This other one, it's an FHA, does have a contingency, but I've worked with these guys plenty of times. They've never had any issue. They always deliver on their promises. Basically 4 days longer to close, and 20K more or so in your pocket. And so, I mean, that was a really easy sell, and it often is. But even with agents that don't know us like that, we will call the listing agent on your client's behalf and brag about how qualified they are, how much work we've done up front, how we know we can close in X amount of days, and we're not going to have all those speed bumps and headaches. And so, for a lot of people, right, that they really just want to hit the easy button. It's not just about money, right? And a lot of listing agents around here will actually point to us or point to other offers. Hey, our highest offer, this big bank, they might delay. Our second highest offer, this other big bank, they might appraise low and be a big headache. Our third highest, this is JVM. Yeah, it's a 10 or 20K difference. But I've worked with these guys so many times. They've always come through. This is probably my suggestion. Either we accept that one or, we counter that one for something else, but this would be really easy and we don't want to mess around here. So it is really, really helpful. And again, leave the lender to the lender, right? We will call and talk about all of that. Right? So we were able to close mine in 14 calendar days. We were able to beat all the other offers, including all cash. That is something we can do. We can do that all day long.
Thanks, Aaron. Yeah, and I think FHA has a bad rap specifically around appraisals, but just to dispel some of that, some of the baggage it carries, appraisals are almost identical between conventional and FHA. They do not require inspections. They do not require termites. They don't require any of that stuff like a VA loan does. The only two things to keep in mind with FHA is one, the heat source of the property must be permanent. So I don't think I've ever seen a house that doesn't have a permanent heat source to be like, at least a wall heater or something like that. That's one big requirement. The second is that there's no peeling paint on the facade because that can indicate dry rot. So those are two big ones. If there's any peeling paint, you can scrape it off and paint over it, or ask sellers to do that. Again, with the permanent heat source thing, I have yet to see a home that doesn't have that. And I bet most of you didn't know that with conventional financing, you could actually close even if you just have a space heater plugged into the wall. I don't think I've ever seen a house in the Bay Area meet those conditions. But anyway, those are kind of the two biggies for FHA appraisals. The rates are great. The closing timelines are great. And especially clients that aren't, A paper like 780 credit, if they're even close to like 700 or high sixes, the payment and the rate is going to be tremendously better for them to stick with an FHA loan.
Guys, so I just dropped a link in the chat. It's a request to our marketing materials. What's great about this is you don't have to text or email Andrei or I. You fill this form out, it goes straight into our marketing team's queue. They just knock it out. They can make digital. They can actually make hard copy prints and ship it to you. That can be to your open house, to your office, to wherever. But there is something in here that I think will be really helpful to all of you. So not only will we do open house flyers or like the down payment assistance programs if you're working with one of those lower priced, mid-level price homes, but the home buyer booklets will be a wealth of resource, a wealth of knowledge for you. we've had clients that, said they got this from an agent and read through and said, like, I've talked to 5 lenders. I didn't get half the information that I got out of your little 20-page booklet. This thing was so helpful. So, I mean, it goes into all the details of all the different types of loans. You do not need to become experts at loans at all. I mean, you want to have some knowledge for sure, but again, leave the lending to the lender. You can reach out. We have people all the time that come to us with, hey, my agent said I need to get this kind of loan, or this other lender said this is the best loan for me. And we'll take a look and, hey, yeah, you do qualify for that loan. That's a great one. But here's these other 2 options that are, very forgiving. And this one might be a little bit more favorable to you because of this or because of that. But we have the bandwidth as a team to really spend that time and handhold with your clients and show them the pros of this type of loan and the cons of that one and put them all side by side. And we're not trying to push any certain loan, types. I mean, we will certainly give our best suggestions saying, I think this one might be, the best one for your particular situation. But, we don't make more money on different types of loans. It's literally how many dollars are they borrowing from us. And so we, again, we're able to spend that time. And that's, I think, why we have such a great, rapport and great user, client experience overall, why we have so many, I don't know if you guys saw this, but we're coming up on 1,200 5-star reviews as a about 12-year-old company. So yeah, people are really thrilled with what they're getting out of us, agents and clients alike. But we will tell your clients how they're special. All right. Don't say, oh, I only send this type of client to JVM. All right. If we don't do it, we probably have access to somebody that does. And here's a really big difference between lending and real estate. You can have your client, in Oakland call it and say, hey, Garrick, I want to sell my house and I want to buy something in San Diego. Do you have somebody you can refer me to? Garrick can pick up the phone, call an agent in San Diego who's never talked to before and say, hey, I got a slam dunk for you. 30% referral? Yeah, absolutely. Let's go. Right. There's no such thing in lending. If we're referring to somebody else, it is 100% based on service and we know that they can do what needs to be done. We don't get a dime out of that. What we want, right, our interest in this is for you to say, wow, JVM has always had a solution for me. Let me call JVM first and see what they can do. Right. So that's a huge thing for us. And if we get bad feedback after we refer to somebody, we will remove them from our referral list. We're that serious about it.
Hey, so go back into that lending experience. So when they fill out their form and you're explaining the things to them, is that like over Zoom or in person, or is it just over the phone?
This is better.
It depends
Andrei,
on what they
options.
prefer.
I see.
Yeah. So I did that role actually for several years. That was the first thing I did here at JVM. I've been recently, coming out in the field and meeting with agents to talk about it more. But with our experience, generally, we find that a lot of clients prefer either phone or Zoom, and just because of the convenience factor. So let's say today, Garrick, you introduced us to a client. The first thing we're going to do is give them a call and say, hey, on the off chance you're free right now, or maybe let's just schedule a time that works better for you and your partner. Let's jump on a conference call and talk through what you're looking for, what those options might be. And so before they even fill out an application, we're not going to put them through the ringer of, give us a full form done. Let's just have a conversation, see like, hey, what are your goals? How can we best support that? And that's when we're going to actually list out some loan options for them. Like, hey, based on what we discussed, at roughly this price point in these cities, here's the taxes you should watch for. Here's the insurance risk you might want to consider. Here's how we might structure the loan so you get the best deal and the best payment out of it possible. So we're going to start kind of laying out that groundwork and explaining to them there's going to be different possibilities for you. So we just really want to identify what's going to be the strongest. And then we move to the application stage and so on and so forth. But, I would say most of our interactions are virtual, especially during COVID. A lot of people slowed down to come into the office. But if you have somebody who prefers that, we have closed deals for people who do not have computers, who do not have emails. Granted, those are not 14-day closed clients. Okay, so guys, please. but if that's what they're comfortable with and that's what they prefer, we are happy to support that.
Or you go make your client a Gmail and get them set up. All right. Don't send them into us with a wheelbarrow of paper files, please.
That's actually a good reminder. There's a few times that I've actually had to run to the client to get signatures because they're not tech updated. Usually because
and with lending there's a lot of restrictions in place too. So e-signature versus wet signature can slow down a process just because of the formality. So for example, if somebody doesn't have an email or doesn't e-consent, to signing documents electronically. When they get locked in, we physically mail them their loan package. They have to physically sign everything and then mail it back or drive it and drop it off with us to get scanned in. So like that process right there, you know, based on the U.S. Postal Service, is going to take maybe a couple of days at best, versus you can instantly sign in, you know, 10 minutes, and we can already get to the next stage of ordering your appraisal and moving forward. So, you know, those are some real delays to think about when we're looking at the realities of in paper versus digital.
I see.
And actually, one last thing, sorry, about the application. We actually use a very high-tech system called Blend. They're a third party out there. They're a company out of San Francisco, actually. So they're kind of the gold standard for mortgage loan applications in our space. One of the beautiful things that their app does is that we can actually watch them do the app alongside from our seat. So for example, if they sign in, I can see where they're clicking. I can see what page they're seeing. So if they're stuck and they're like, I just don't understand what this is asking me for, we can coach them through exactly what they see to make sure it's a smooth experience. Usually it takes people 5 to 10 minutes to fill out an application, but we know, you know, technology is everyone's strong suit, so we want to make sure that they have the most support they possibly can.
I almost timed mine. Mine was about 4 minutes. Right. So, now this is again, it just, I mean, I was a straight W-2 employee, right? So obviously your clients that, you know, own a bunch of LLCs and money's coming from 14 different bank accounts, things like that, it's going to be a little bit more time consuming, just the nature of it. I did actually want to point out, Garrick, did you talk at all about how, you know, how we are a team, or does the team just know that these two jokers are going to be on your Zoom?
And Andrei did mention it a little bit. He did say that the call comes in, but go ahead and explain that. How does that team process work? And
yeah, so, you know, I mean, I joke around.
I'm familiar,
you know,
with it, but
okay, yeah, I know you are. I joke around, you know, with agents I'm talking to the first time, like, hey, look, I know everyone you ever have talked to, ever will talk to, says, but wait, we're different, right? JVM actually are, okay. We operate as a team in the truest sense of the word, meaning, so we have a team phone number and a team email. Those are both monitored by somebody 7 days a week during business hours. And again, now we actually have the extended offers, which is going to be, you know, it's going to be devoted to, you know, just the really crucial things like a counter offer or something, not, hey, can you run 17 scenarios for my client that might want to buy next year? You know, not that one. But because we operate as a team, right, we are actually able to do things like Andrei said, guarantee 60-minute response times. I'm not bashing the loan officer model by any means, but you have, you know, a one-man or one-woman army that's doing A through Z with 100 clients at a time. They only have so much time they can spend with them. And if they're doing a lunch and learn, or they have, you know, 6 meetings back to back to back, you're going to be delayed sometimes. And so what's fantastic about the way we operate is you're going to introduce somebody to us via the team. Someone's going to be able to jump in and respond to that right away, reach out to them right away, try to set up a conversation right away. That client advisor, right, that sub team we have, there's 5 or 6 of them. One of them will be assigned to your client. That'll be their contact person throughout. Well, what's great, again, is if your client needs something right away and that client advisor is busy, somebody else is able to jump in. We're all using the same systems, the same ways. They don't have to re-explain themselves 5 times to 5 different people like a Comcast customer service center or anything like that, right? It's kind of like, hey, Andrei's my guy. Andrei's busy. Hannah steps in right where Andrei was. She sees all of the notes, has all of the documents right there in front of her, because all of the access to all of our systems is just totally seamless. But that's, again, why it is such a smooth operation and why we're able to respond so fast and close so fast and everything else. And, you know, sometimes your clients, you know, they might even be talking to a different person and have no idea because it's just through email or through chat or something, right? Oh yeah, hey, my person at JVM is taking care of me. This is fantastic, right? So that person will be with them till, you know, like the 5 or 10 yard line. You get into contract. You know, now the processing team is going to step. They're not going to take over completely, but they're going to step in, and that client advisor will be a secondary point of contact. And so, you know, all in all, excuse me, it's just so much smoother and seamless because they don't have to go all around and be transferred department by department by department, right? And yeah, that's exactly why I wanted to point that stuff out. That so your clients have an army of people here to help them. All eyes are on the same prize, because with our model, we actually all get a little bit of the commission from every single deal. So there's a ton of collaboration. There's no, oh, that's not mine, I'm not worried about that. everyone here has a vested interest in every single referral, every single client you would ever even think about talking about with us. Does that make sense?
Yeah, good deal. Hey,
Awesome.
Any questions from anybody else on the call?
Yes, please. Cricket's in here today. Come on, guys. It's Friday.
They're a little shy.
You can keep the camera off. We don't have to see that you're in your pajamas on the couch.
So the majority of the team here, where are you guys? Or Garrick, I guess you can answer.
We're Alameda, Contra Costa, Silicon Valley. So,
Okay.
Yeah, just up and down 80 for now.
Okay. Yeah. Well, that's great because that's actually where we're really well known. I mean, probably 65% of our business is along the 80 corridor. So we're extremely well known. Richmond, Berkeley, Oakland down. Really well known. Walnut Creek, Concord, Pleasant Hill.
Yeah. I dropped that approved and ready to move list in the chat, by the way, guys, if you want to take a look and see. I mean, like Aaron was saying, the majority of our clients are going to be Berkeley, Alameda, Oakland, and then Walnut Creek and Concord are kind of our other two concentrated areas on the 680 side. But I think if you have listings coming up, there's probably some good opportunities for approved buyers who are serious, know this market, know today's rates, that you could potentially make a deal happen for.
There's actually a couple of agents that I've done this with as well. That we planned it ahead of time, but this was before this thing existed. They would tell me that they're going on a listing appointment, via text, and I just did this little role play thing sort of with them, right? But it's like oh, fantastic, you're gonna crush it. What's the address, right? Oh, it's 123 Main Street. Oh yeah, those usually selling for 900 right now or so. Yeah, I think that's what we're gonna get. Great. Hey, we've got 15 pre-approved buyers looking in that price point in that area already. Would it be okay if I told their agents that this one's probably coming soon so they could get ready for it? Right? I mean, we can totally make this stuff up, but that's another thing that you can use in a listing presentation. Hey, not only have I prepared to market your property and know all about the neighborhood, but look, I did some research with the lender. Look at this conversation. They've got, I know about buyers that are ready to go and want to live here, right? We can get this thing sold, like that, or we can even go off market if you want to. This list is great for if you have a client that really doesn't want to go through the process and the hassle of staging and paying that extra fee. Hey, could you sell it off market for me? Do you think you can do that? Well, let me take a look at my list. And yeah, actually, there probably are 10 or 15 people in my network that I could bring this to. Let's take a look.
Good deal.
Oh, and actually kind of the inverse of this approved and ready to move list is something else we just launched on an individual basis. It's called Quip, and it's essentially a portal into our CRM. We use Salesforce, and so what we do is we're building these personal links for each agent. Obviously, you send one or two people over to us, it's pretty easy to keep tabs on them. But we have some agents that are sending 2 or 3 people a week over to us for months or even years. This will actually be something they can bookmark and look at 24 hours a day, see the status of every person they referred to us. So it's great for their own pipeline. They can get in there and see like, okay, here's my people that are pre-approved that I'm actively working on. Here's these people that are, are working on getting their documents together or working on improving their credit or saving up down payment, whatever that is. But it's a great tool for you to look at and keep tabs on your people. And then of course follow up too, right? Hey, you said you were totally ready to go, and JVM's still trying to reach you. What's going on? And we will reach out to you on these things as well, right? We do want it to be a true partnership, but if we're trying to get a hold of a client you sent over to us, we're gonna, hey Garrick, we're really trying to get a hold of Reggie here, and no bites. And have you been talking to him lately? Can you help us out? But that's a big thing, right? We want, our vested interest is in you being busier than we're busier. And we want to make you as efficient as possible. That's why we are adding all of these additional tools.
The Cal HFA, does that work for condos also?
Yes. Oh, absolutely. And don't let the acronym fool you. It's Cal HFA, but it's not FHA. So the Cal HFA uses a conventional loan type. So they're not going to have any of those condo approval problems that you would have with an FHA loan.
Okay, I think I might have a client for that. They're looking at wanting to save up some money, so this might help accelerate that process. Is there a minimum credit score? Because I think that was the other thing they were concerned about.
I believe it's 640 is minimum, 640 or 660, depending on the program, but 660, no, it's 640 right now.
Is there an issue with litigation? With
Depends.
litigation,
Isn't
So
there
if
always?
yeah. So if it doesn't affect the unit and it's like slip and fall personal liability, we're usually fine and it's not going to matter. Where it matters is when it's structural litigation, right? Like you guys didn't replace the roof in time and now my unit's leaking, so I'm suing you guys for $20,000 or whatever. That's where it's going to be a little bit more of a roadblock. So it's really specific. And I would also add, it depends on how cooperative the HOA is. Some HOAs are like, yeah, here's all the documents, here's exactly what you need. You know, you can see it's not a problem. Others are very tight-lipped because they are very like fearful or timid throughout the litigation process. So again, it's not a guarantee, but I will say it's still worth a shot, and we can shop it and get the clear to go before your client even sends in a document.
okay.
And if your clients ever say, I'm so tired of this place not fixing things, and this thing's always broken, I'm going to sue this place, tell them, no, don't do it. You're going to ruin that place and no one can ever buy there again. We've seen a couple of those fairly recently. Unfortunately, these condos can be on the market for years, probably, with the lack of being able to sold without, unless they're just going straight cash.
Yeah.
Yeah, it's pretty unfortunate there.
Okay, good deal. Last call, otherwise we'll go ahead and wrap up and we'll go off camera. Anybody got questions? Any last words, JVM?
No, thank you so much for having us and for this opportunity. Hopefully your team, got something useful out of it, and we can help out with some of their clients.
Yeah, my takeaway was the Cal HFA. I think I'll send over my buyer to get them to take a look at you guys and get some numbers in.
Oh,
All right,
I did have one more
Aaron.
thing actually.
Thank you, Andrei.
I have one more thing actually, Garrick.
Yep.
I just remember this. So really big thing. Do not let any of your clients get told by another lender, you don't want to run a second application. You don't want to get a second opinion because it's going to mess up your credit. You have 45 days to run your credit infinite times. Even if you're outside of that window, it's probably going to make like a 7-point ding or something, right? And that's really only going to affect somebody that's at the very bottom threshold of qualifying. So if they're a 722 and they need a 720 for that kind of loan, yeah, they're going to have a little bit higher rate from that bit. If they're a 750, they go down to 735, not going to impact them at all. But we can do the what if game with them all day long and say, hey, if everything checks out as you think it is, we're probably looking, like rates around here. And we'll take a look at the loan estimate they have from somebody else. If it's fantastic, we'll say, that's fantastic. We can't touch it. Go ahead and keep that. Mm-hmm. Andrei had somebody just the other night, 2 nights ago, that said, hey, can you do something with this? And the guy had 2.5 points, right? That was what, $12,000 or $14,000 additional fee he had no idea about. It's
not just that, it's 2.5 points plus they were charging him the entire policy worth of mortgage insurance up front. So it was no monthly PMI, but they were paying $5,000 in PMI at closing. And so he had no idea. And I walked him through it. And I was like, look, you guys are actually paying $17,000 for this rate. You think you're getting it because you have a $6,000 credit. You're like, oh, this is awesome. But you're paying 17 and getting 6. So you're still in the whole 11. And so once we walked through that, we were actually able to save them on rate, save them on closing costs, and fortunately get them locked in for something a little bit better.
So my point is, get that second opinion. Tell your clients to get that second opinion. My own mom got a second opinion outside of me. And I was like, Mom, right, quit shopping your damn son. No, and I'm really glad she did it because I have this, absolutely true story that happened 3 years ago. She got pre-approved with us. Then she got another, talked to another lender and said, I don't know, sweetie, I think this other lender's giving me a better deal. I looked at the estimate, okay, and he gave her an estimate of only PI, right? So, the PITI, he only gave principal and interest. Taxes and insurance, they're not technically part of the loan. So I guess you could say he didn't lie. It's very misleading though, if those are something you have to budget for and pay every month. So when she actually got an apples to apples comparison, right? It's like, hey, you need a full estimate that has these other things included. For the same loan on the same home, we were $141 cheaper, right? That's a lot of money times 30 years. And it's a lot of money for, you know, a 64-year-old at the time in the Central Valley, right? And so that's exactly what I tell people, right? There's a lot of smoke and mirrors out there. We would love to be, we have no problem being a second opinion, you know, but we are a lean and mean operation. So, you know, even if it's not necessarily the rate we'd want to do or the credit we'd want to do, if they truly got something that's just out of this world, great. You know, we might be able to say, hey, we'll take a little bit less and still call it a win and still be able to help these clients in. And we'd rather have them be our clients for life. But we're able to do those kinds of things where a lot of other bigger operations, a lot more overhead are not. But what I'm really saying is get that second opinion, tell your clients to get that second opinion. And that's exactly why we have so much trust and so much credibility. And, you know, we'd love your clients to be able to afford more, right? Maybe even get a bigger house with a, you know, a lower cost because they qualify for more with our lower rates and fees.
Good deal. Good deal.
So I'm going to drop our email addresses in the chat.
Okay.
As well. So you guys should absolutely all email us. You should also get on our blog. I can set you guys up with that. It's not a rah, use JVM, we're the best. It's a 2-minute, you know, here's what appraisers are looking for. Here's what factors influence an interest rate. So it's really useful stuff. You guys can often share with your clients like, hey, here's a more in-depth, you know, write-up of that thing we were talking about the other day. Here's what we think is going on in the market. So we're here to be a resource, an advocate, and make you busier, seeing us more. Looking forward to our teams lighting up leaderboards together, guys.
Yeah, so if you guys so if the team hasn't signed up for JVM's blog, that's definitely worth it. It does come out on the email. I've read it a few times, and you know, keeps you up to date what's going on. All right.
Fantastic, everybody. Thank you so much.
Thank you, Andrei. Thank you.
Thank you guys so much.
Go crush your weekend.